The last session of the day is on alternative lending. Lending has been a financial activity provided in most cases by banks or authorized entities. The emergence of fintech has enabled new ventures that provide peer-to-peer lending solutions and small business loans. The panel sheds light on this fintech vertical that might boost SME funding in many markets across the world. We will hear from Daniel Bouzas from European Banking Federation, Filip Dimitrovski from Tigo Finance, and Koray Bahar from Figopara.
Thank you, everyone. Thanks, everybody that is today joining the Istanbul FinTech Week. We have right now a very interesting panel with both Koray Bahar and Filip Dimitrovski on lending by fintechs. This panel is mainly focused on how the challenger institutions are driving lending by fintech. So we have both Filip Dimitrovski, that is the co-founder and CEO of Tigo Finance, and Koray Bahar is also co-founder and CEO of Figopara. So both fintech companies looking at lending, two different target markets, I would say, but I would like both of my guests here today to present themselves. So please, maybe Filip, you could go ahead.
Thank you, Daniel, for the introduction. Yes, as you already mentioned, I'm the founder and CEO of Tigo Finance, but in the same time, what is worth to mention is that I'm the president of Association of Financial Institutions, which is established in Macedonia and currently joined by the largest non-banking financial institutions on the market. Well, that's about it from my side.
Thank you. Koray, please go ahead.
Hi, Daniel. I'm the co-founder and CEO of Figopara, and last year I exited my first venture, which was the Foriba, which was related with the electronic invoicing, and the Figopara idea popped up based on that actual venture. We are going to talk about that. And I'm also the board member of Endeavor Turkey, and I hope we are going to have a really good session today with you.
Okay, so thank you very much. I mean, I think this is very interesting. We have two different countries, two different approaches most shortly, and two very distinguished speakers that I would like to already ask a first question from your side. I would like to understand a bit more about the different business models that you have. I mean, understanding that difference in the size of the countries, probably also the market and the different SMEs and probably also retail customers that you are dealing with. I would like to know a bit more about what is the focus of your customer base, your business focus, and what are the core elements in which you are really focusing in. So, Filip, maybe would you like to start from your side?
Yeah, basically general info about Tigo Finance. We consider ourselves to be the ultimate leader on the market, as per innovation, size, market share, and this has to be taken into account that we are actually operating on a fierce market which currently counts 29 direct competitors. Statistics-wise, just last year we had a record high amount of revenue, exceeding 5.4 million euros, and basically has the revenue growth in comparison to other players on the market. As for the core business and core focus of the business, actually, we are striving to improve financial inclusion for underserved population, in other words, unbankable clients. And basically, we are focusing mostly on retails, not as much as on SMEs. And we are trying to lend as much as possible in a reasonable manner, basically offering highest level of transparency. As for the trends of the market, they need to be the need of access to alternative finance on the market, both for retail and SMEs, is evident, obviously, in our market, because there is from year to year a continuous growth, as well as higher and higher marketing share in comparison to traditional financial institutions. I can obviously share some data as per national bank data that we have available in North Macedonia. For 2019, non-banking financial institutions hold modest 0.6 actually percent in the total assets of the financial market. Yet the trend and the growth of these companies is evident in the solid increase of the total loan portfolio for comparison purposes, which is counted at 45 million euros in 2019 compared to 29 million euros only in 2018.
I see. Thank you very much. That's very interesting data indeed. And from the other side, so Koray, please, would you also like to explain a bit more, because I know you were transitioning from one company to the other, and Figopara has a very specific also business model, and I would like to also understand a bit more how does it work.
Yeah, for sure. On Figopara, we deem ourselves as a supply chain finance platform. So we have two main business models. The one of them is we call the buyer guaranteed. So we have more than 10 large buyers on our platform, and those large buyers are providing their own credit line to their supplier network. So we already integrated the 10 largest banks in Turkey. So those banks are become the lender for the supplier on Figopara platform. So on this business model, we already discounted more than $18 million of invoice on our platform, and $180 million of invoice discount on our platform till today, and roughly half of that amount is discounted within this year. So this is the first business model. The buyers approve the electronic invoice on our platform. Then the bank partners are providing the offer to how much they are able to pay right now to the supplier. And for the supplier wise, within a minute, they are able to discount their invoices and get their cash on their bank account instantly. And the new business model, what we are about to launch within a month, we are going to score the suppliers based on their electronic invoice data. So we are really lucky in Turkey because more than 300,000 companies already using electronic invoicing, and all of their inbound and outbound invoice traffic is already centralized by the Revenue Administration, Ministry of Finance. So on Figopara, with a single sign-on, 10 largest electronic invoice service provider integrated on our platform, so the SME able to connect their service provider to Figopara. So Figopara scoring engine is collecting all required information and populating the trends, how much their revenues are growing or how much decreasing, and many different ratios we are populating and score. And based on that score, our bank partners or lenders are providing the offers to the SMEs. So roughly $12–15 million new additional volume we are expecting through the new business model starting from in December.
I see. Okay, thank you very much. That's very interesting. So we could see that both companies, to some extent, they have two business models. In the case of Filip, it's mainly focusing on the retail customers, the unbanked. But also, I understand that you're dealing also with SMEs. And in the case of Figopara, is a platform that it allows for both to allows to collect the client data and scoring it, and at the same time allow the banking partners to provide the financing to the companies that they see there and discount the invoices. Okay, that's very interesting. And one of the elements that I think it's quite relevant here is the balance between fintech being SMEs, and at the same time the customer base that they have is in many cases SMEs or clients that are very small or small in terms of financial assets that they hold. So that's quite a concrete element. And here I would like to understand a bit more the differentiation and the different models that we're seeing here between traditional innovative finance providers, because I do understand that, for example, in the case of Filip, you can access the unbanked, that in many cases the bigger financial institutions cannot. And in the case of Koray, is mainly about really understanding those companies very well, so banks don't need to really assess so closely those transactions in a way. So I would like to understand in the first place, take into account the concept of fintech as SMEs. If you are feeling quite a lot of pressure from traditional players in the market to really overtake your business or to really partner with you, as in the case you were mentioning before, Koray. And also, what can the fintech bring to the customers that the traditional players cannot? In many cases here, I would like to really distinguish between the fin part of fintech, so the financial element that I would think that Filip has very well quite covered in a way that really understanding the customers, in a way to provide the financing, and the tech part of the business that Koray can also cover in saying, okay, we have a platform, and the service that we're providing is also financial, but the platform itself is one of the core assets that we have as a company. So I would like to explore a bit more those ideas. So please, maybe who would like to go for it?
Filip,
maybe.
Okay, then definitely, yes, I would say traditional financial institutions, or in other words, banks, the main difference between them and us. Basically, they did not have the luxury of being born as digitally advanced as we are.
Yeah. Exactly.
What does this mean? Basically, our focus has always been on speed, agility, accessibility, frequent modification on processes, maybe even tailor-made products that will better satisfy customer needs, and similar initiatives which are always in the direction of offering better service, more quality service, and having a sustainable or a long-term acquisition, which can be achieved by this exceptional customer care. So discussing about what does fin out of the fintech means in our case is, as I said, the technology and expertise and the rapid response that the fintech lenders can throw at these problems. When I say these problems, I'm referring to this basically post-COVID or recession period, means a lot. Technology matters a lot in the same time, but when you offer speed and exceptionality for a certain service, or when you are tailoring the products with an each customer counts attitude, this is when you actually have an acquisition on a long run on customers.
Thank you. I think that covers a very important point that probably I would like to ask afterwards. That is on the COVID and how the crisis has impacted you. But going back into the fin and tech distinction, Koray, please, what are your take on this?
I'm always telling to our bank partners and the customers, we don't know how to sell the money. We know how to sell the technology. I think our main fundamental is coming that part, because the supply chain finance is then not a new product for banks. So last decade, many banks already developed such a kind of platforms in their core banking system. But the problem is how to integrate the huge core banking system with the large enterprises. And many large enterprises, when you visit the IT team, they have many concerns about the connectivity, security, the integration. It's at least any integration with a bank, it took 6 to 12 months. So it's a huge investment for any large corporate. So what we are doing on Figopara, within a couple of weeks, we are able to integrate one large buyer to more than 10 different banks. So it is one of the most important, I think, value we propose to our buyers on our platform. The second thing on the Figo score model, the credit bureau in Turkey, they're only able to score the companies or the individuals based on their credit payments or the check payments, how many check they give into the market, and what were their performances. But in our business model, and also the banks are taking the balance sheet information from their customers before they lend the money to them. But those data is sometimes 3, sometimes 4 months old data. They are working on deciding to lend the money or not. I think the pandemic is proved us, maybe last month a business has a really strong revenue, really good business model, they have cash positive. But if you last 3 months track on your customer, then you're able to lose the money. So what we are able to do, because of the electronic invoice technology we have, we are able to see all of the revenues and the cost of any SMEs on our platform. So this is really unique value for our bank partners, because just before deciding the lending the money or the credit decision, we're able to see the whole trend of the company, and then we are able to decide to lend or not to lend the credit to that SMEs. I think with that technology perspective is giving this ability to us, and all the new countries who are already published or planning to publish the electronic invoice regulation going to open a really good opportunity for the fintech similar Figopara, because the data is really important, and how you are easily get that data into your platform and then able to populate meaningful insights on those data, I think going to more democratize the SME financing in the near future.
Okay, thank you very much, Koray. I think that covers quite a lot of interesting topics that I would like to to continue the discussion about. But before that, I mean, I would like also to understand from Filip a small follow-up question before we reach, let's say, the mid of our discussions. That is, how do you say? I mean, I understand that in the case of Koray, data it's critical, and also data is critical in your case, Filip. But I would like to understand a bit more. What is the difference between extracting data from retail customers, from SME customers, and what are the different challenges that you are facing in financing those two different kinds of clients that you have?
Well, I guess here we're discussing mostly about what kind of data we can access to, right? When it comes to retail customers, and this is basically specific for Macedonia, I would say it's not the case in the region, but just Macedonia. Yes, we do have an access to credit bureau, which gives us an insight of all the credit worthiness of the retail customer. Nevertheless, we are lacking crucial data such as employment, such as personal assets, and maybe liabilities, ownership of other material stuff, and etc. Given the circumstances, we are able to come up with an automated decision, even by having just the data from the credit worthiness check, and basically adapt our scoring model, obviously using some machine learning techniques. So all in all, for us to be able to give an approval or rejection for a certain customer. But if we had access to other data other than the credit worthiness, then our risk would have been a lot more lower.
I see. Thank you very much. I mean, I think that clarifies a bit more how you access actually that information and the difference that in terms of the retail customers it has compared to the SMEs that have, in the case of Koray, the invoicing and all of this data around. Okay. So then I would like to go briefly, just a quick question, just to understand from your side, what do you think in terms of COVID-19? All of the situation has changed. Many customers, especially in the case of the bank, have had more difficulties in accessing money and accessing the financial services. But I would like to understand if this is an opportunity, a growth opportunity for you as fintech, in order to take, let's say, bolder steps in the market to replace, to some extent, the banking players, or you think there are some challenges also for you in the way forward on how to continue delivering your services? I don't know, Koray, maybe you would like to go for it. I mean, you raised the topic.
In my opinion, there are, of course, really strong opportunities in our business because the demands are rapidly increasing. Of course, there are some cons, which is the cost of the money, or also the risk appetite of the lenders on the platform. Because during these pandemic season, I think the many banks or the lenders would like become more conservative than a couple of months ago. So it is I think the con side, but on our business model wise, so I think just last month we 4x bigger than the beginning of the year. So it's a huge growth we see because the suppliers needs cash, but on the other hand the large buyers would like to extend their payment term. So on Figopara, we are giving that flexibility to the buyers, so they're able to extend their payment due dates, maybe a month, maybe 2 months. But on the other hand, they need to support their suppliers. So through their own credit line on our bank partners, they lend the money instantly without waiting any payment due dates extension. So because of that, the business model is really fit. But I believe the user experience is really critical in this scenario because the suppliers don't able to go to bank, they are not able to do many things physically. So providing these services on digital, I think it's more important than the cost of the money or the flexibility on the platform.
Yeah, which I think covers quite well the point you were making on the technology itself before. Thank you. So, Filip, maybe from your side, what do you see in an economy like Macedonia, where the challenges to opportunities for you? Please.
Yeah, in simple words, and truth being told, we hadn't been immune to the COVID outbreak. Obviously, we have had to adapt our working and lending practices. In the same time, capital and financing sources, and eventually operational and fixed expenses. So basically, all we had to do was make sure that we remain liquid. However, as for the period that follows now, I see COVID-19 as potential for growth for companies such as us, since non-banking financial institutions were actually even born in time of crisis. So now more than ever, the access to finance to retail customers at least is going to be more than crucial. And with the enforced, in brackets, digitalization of the society, obviously caused by COVID, the fintech might be the proper solution offered to these clients, even SMEs, to bridge the period that they have in front of them.
I think we lost your sound, Filip.
I could hear him.
Anyways, yes.
There wasn't any problem.
Yeah. I can also add something very specific about Macedonia. During these COVID times, we had certain government measures which were taken in place, and the fact about this it was that all the measures were in line with protecting the retail customers and less with protecting the industry itself. So in those times we faced challenges that impacted our liquidity from different sides. One was the regulatory one, the other one was the movement restrictions because of the curfew itself, and then in the same time existing funding which was in place pre-COVID sort of got freezed and stopped, whether it's from a related or unrelated party. Therefore, you are in a position where you have to kind of postpone receivables that you have from your customers, and in the same time you are not allowed to postpone the liabilities you have towards the related party.
Yeah, thank you. Indeed, it makes a lot of sense, and I would like maybe then to really, that's something that brings to me very interesting perspective. I mean, given that maybe my professional information, or maybe from the European Banking Federation, representing the banking industry, I see, this is a very interesting dialogue in terms of competition and in terms of regulation, and where do we need to stand in terms of, really looking at the future, and at the same time looking at how to best finance the economy. I mean, in Europe, I'm extending, let's say, not only the EU, but the broader European context, pre-accession countries in this case. The European economy is mainly composed of SMEs. I mean, if I can extrapolate the data from the EU country that we have right now, it's 99% SME composed. So if you look into that, and the majority of companies are being financed by banking institutions, by credit. So how do you see, let's say, the regulatory environment being, let's say, fit for purpose in terms not only of the COVID-19 response, in terms of saying, okay, we have these specific measures at national level that need to be, put forward, and then we need to think in the next crisis, maybe at some point, how they should look like. But what are the benefits or the hurdles that regulation is putting on your business? And I would like to understand, if you see, also again from my professional information, that if you see benefits in adapting EU regulation and transposing EU regulation into your own regulatory environments at national level, or you think that maybe by pushing your national governments or your jurisdictions to actually be bolder, you can even generate, let's say, how to say, a more interesting sandbox in terms of how fintechs are operating. That should be also interesting for EU partners and for maybe more EU banks to look into. I would be quite interested in understanding a bit more from that side. Open to both Koray, Filip, who wants to start, go for it.
If I may, to bring the situation closer in a region where banks are dominating the lending market, such as the Western Balkan region, I would say access to capital and funding for a non-banking financial institution was identified even by the World Bank as a primary barrier towards competitiveness. This is one point. The second point is that what World Bank also sees is that the regulators in this region are not taking activity-based approach, but rather an entity-based approach. So they do not understand the models, the business models of all the players on the market, and they are taking measures which for some members or players might be beneficial, but for others might be a game changer in a negative manner, obviously. And then finally, you have a global trend where 60% of financial service by customers is expected to be done through digital media, and at the same time access to payment systems for non-banking financial institutions is in a position where it's not strictly forbidden, but it's not allowed as well. And when you have a trend as such that the customers worldwide are actually looking for financial services by a fintech provider, which is also coming from a World Bank report, then you have to, I mean, this is for regulators, they have to pay attention to what are the global trends and how to support these trends instead of harming those trends.
Thank you. That makes a lot of sense. I think, you know, World Bank data, it's quite a good source of understanding this, but of course, I mean, if you compare the different levels, let's say, of advancement in terms of economic development and how, let's say, banks play a different role in assessing risks in different jurisdictions, maybe fintech can also play a role. In your case, for example, to accessing those unbanked or those retail customers that are more difficult to reach, or in the case of Koray, also to reach those companies that want to do things in a more efficient way in the platform. So, Koray, how do you see the role of regulation in all of this? And I think you mentioned before that, you know, mandatory electronic invoicing is something that is quite beneficial for you. So maybe you can elaborate on that. Yeah.
Before about my previous business, actually, we call that business a regulation technology, RegTech. So the whole venture based on the regulations. So the many different tax and compliance regulations are make it happen. Then it is time to use that data for the financial industry. I think what we are trying to do on Figopara. But on the lending side, especially as a fintech in Turkey, a couple of new improvements are just happened during this pandemic season. So one of them is a digital KYC. So the banks are now able to do digital KYC. The regulatory authority just allows them to do it. And on top of it, the credit agreements able to be digital. So in the next couple of months, we're going to able to lend the money based on the credit agreements on digital. So it is going to be a huge leap on the accessibility of the money for the really small micro or small enterprises. So on the other hand, as a fintech, the regulations, of course, are looking us really, really deeply because we are bringing the buyers, suppliers, and the lenders on the same platform. So we are aggregating all the data, all the really sensitive data of the companies because we have all of their income and all of their costs. On the other hand, how much that supplier are issued to one of their customers. And on the other hand, we know all the proposals of the banks in our platform, the supplier is able to see them. So these are really critical and sensitive data. So it's a totally new business in Turkey. Because of that, we are auditing our system with a different auditor company. So we are proving the technology is eligible to do that. And all of our bank partners already auditing on IT or KYC or GDPR. So they all audited a couple of times. So I think one of the good things on Figopara, the IFC World Bank is one of our shareholders. We have a couple of different VCs, Revo Capital and Endeavor Catalyst. And that governance also proving the local authority, yes, Figopara is a proven partner who are able to aggregate this information. I think that's the only important thing. As a new startup, you have to prove your technology and abilities and the trust. And I'm always saying that we are not selling any technology, we are selling the trust. So if the customers, if the buyers and the banks able to trust us, then the many doors are able to open much faster.
Yeah, thank you, Koray. And I think those are very good points. I mean, first you're selling the tech, then selling trust. And I think that the selling trust aspect is one of the elements that Filip was mentioning before, when he was talking also about the excellence in the service that allows you to actually acquire a broader set of clients that actually want that delivered. No, so I would take from here that regulation is both an enabler and a challenge that is posing you in an extent. You know, the compliance to maybe stricter regulation in terms of client data, in terms of how to comply with that can generate hurdles for you. And I can tell you, at EBF we're a big, let's say, proponent of same activities, same rules. But in that regard, I do understand that in terms of allowing this kind of innovation and this kind of creativity in the market, this is more than necessary. Okay, so I think we are already, 2 minutes left. I think we're quite on time. So I would like now to leave a bit freely to really discuss, maybe 1 minute, 30 seconds. What do you think are the core takeaways that should be taken by your audience today in terms of, what is the role of fintech in lending? What is actually the role of fintech in the economy and in the broader society to really bring this innovation forward and generate benefits for everyone? I would like, maybe, 1 minute each. That would be great.
All right, Filip.
Yeah, in my opinion, I think this pandemic is proof that all the financial services have to be more accessible, more reachable, and more easy to serve on the SMEs. And on the other hand, the good thing is the authorities are supporting these new initiatives. So I'm going to see the next couple of years, many opportunities are waiting for the startups in the fintech industry.
Yeah, thank you, Koray. Filip, maybe you can go ahead.
In conclusion, from my side, I believe that fintech potential is definitely imminent. Globally, it's expanding day by day, and we, as non-banking financial institutions offering fintech solutions, definitely play an important role in recovery as well as the healing of the economy. As we are, in a way, discussing about retail customers improving purchasing power, but at the same time, we are improving financial power of SMEs to whom we lend money as well. In order for this potential to be realized and efficient, then both access, I would say, both to data, but as well as capital should be made available for companies such as ours. So we can easily bridge crisis period such as the pandemic itself. And this goes in the same direction that I support, that support from the regulator actually is needed. In what I said previously, instead of having an entity-based approach, actually adopting an activity-based approach.
Thank you both. And I think those are very great conclusions from both of you in terms of, we're covering everything: the pandemic, regulation, fintech as SMEs, fintech as financiers, as technology providers, and as trust providers. And I think, this has probably opened a bit also the eyes and the ears of our audience today. So thank you very much, both of you, and hope you have a great day.
Thank you.
Thank you as well.
Thank you.
This was the last session of the Digital Banking Summit. Hope you enjoyed it. Let us meet for the InsurTech Summit tomorrow that will start at 10 a.m. with a keynote address.